The Stock of the Day is brought to you by IG, Australia's #1 CFD provider. Trade over 17,000 markets with extended trading hours on key US shares and competitive spreads, all on an award-winning platform. Get started at IG.com.
We're going to go there in terms of our stock of the day, just as far as one of these stocks that's affected locally. It is REA Group. Having reported today, shares close to 2-year lows after its half-year profit disappointed. The property listings group reporting a 24% decrease in reported half-year net profit to $336 million, largely reflecting the gain on sale of its investment in Property Guru. Profit from core activities up 9% to $341 million, despite fewer listings, but supported by stronger yields in the residential sector. Still, it has lifted its fully franked interim dividend to $1.14 a share, while launching an on-market share buyback of $200 million. The share price, as I mentioned there, coming off almost 9% to this point. And RBC Capital pointing out that its first half results have missed consensus. According to the broker, FY26 outlook suggests that new listings will decline by 1 to 3% in FY26, reflecting fewer offers there. So, what do our experts think? Jun Bei, does this fall into that basket of a quality stock that's been hit hard?
Look, absolutely. So it absolutely fits into that group. And what's interesting is that the result itself, with the outlook, the downgrading the listing somewhat, that's pretty much known for most of the people, because we've seen the listing is a little bit softer. But what's really good is that though they are heading into a period where they're cycling really easy comps, and they're heading into 2027. June, the December half in 2026, it should start seeing really soft comps. So that means the growth is actually going to pick up for this company in terms of volume. And on top of that, the company actually said that the yield is actually going to be, they upgraded the yield expectations. So the price, the premium product is selling better, and then the price increase has stuck. So all of that is going to actually underpin double-digit growth for next year. And then they talk to the cost front and the like. It's a little bit better than expected. So net, the result wasn't that disappointing. It's actually going to see very, very minor consensus earnings changes, and into next year it's actually looking pretty good. There's a lot of fear about AI and the like, and I think this company really got caught into it. They own their listing, so people still need to advertise their houses on the REA. AI tool aren't able to access those listings like it is in the US, so it's very difficult to be disrupted. Our view is that absolutely it's been overplayed. It's never been this cheap. I think last time it was here, it was just at the worst time of the pandemic. So and for REA to be trading at this valuation, it's incredibly rare.
So I'm taking that as a buy.
It's a buy.
Yeah. Just in terms of AI, though, is it only a matter of time before it eats its lunch?
Yeah, I actually think it will be quite difficult. So again and again, we see the large aggregator trying to come into our market, trying to compete in those, whether it's Google listings and others, into the classifieds, especially the real estate front, and then they faltered every time. So, simply because Australian market is unique, REA owns its listing. It's very difficult for others to have real data, real-time listing that is to be able to advertise. So it's actually quite difficult. And I think if anything, REA has talked to a lot about how they can utilize the AI tool to drive efficiencies and then, increase the potential for higher yield growth and to have better tools.
Zach, how are you seeing it? Obviously that result, but also what is ahead? And more broadly, as we've just been talking about, that threat posed by AI.
Yeah, look, so we own the stock. We think it's one of the highest quality stocks. Like Jun said about the yield, that just tells you the very sticky and important value proposition that this plays within the real estate market. Look, longer term, I think you need to be a bit mindful of what AI and the tools of AI may do to them, and this has to be married up with what REA themselves are doing. But if AI is all about data, then these guys have one of the best data sets out there for their industry. And they've got a very strong market position. So long term, look, we are a little bit, we're mindful of it. We have skin in the game. We like this stock, and so effectively it is part of our portfolio. So we are a buyer of it, but we're not completely kind of dismissing the risk. But at these levels and the near term, like Jun said, I mean, what's new? We know what the risks are out there, the narrative out there. So what's the next incremental decline in the share price? And I think listing volumes is well understood. But yeah, so from our perspective, look, this is a buy. but we are a little bit more mindful of what the long term may hold for this stock.
That is a double buy then for our stock of the day, which is REA Group.
The stock of the day was brought to you by IG. Trade over 12,000 shares and ETFs, including major tech giants with extended hours on an award-winning platform. Get started at IG.com.